It's a pleasure and privilege for me to be an integral part of this interesting and exciting celebration. The drive and the determination, the vision and the conception, and execution to professional perfection. Mr. President, you have done it. 40 years of hard work. This is not an ordinary seed which you have sowed. Extraordinary vision has made it possible today. It's passed on to the new generations. Your positive thinking, your value streaming, your conceptions to make it happen, not let it happen. In your speech, you said more about the gain, not about the pain you have gone through. That's an extraordinary trait. And again, you're part of the possibilities, not problems. You're part of the answers. That's what I could gather. I am privileged to be part of the fraternity. And I'm glad the new generation is carrying on the mission. We are becoming a knowledge society in the changing world. Knowledge is continuous. Continuing education is the trait of success. Sustainability comes in world over, not out of original conception. You need to update yourself. You need to educate yourself with the changing face of the world, changing face of the market. That's what I learned in my profession. Keep learning, keep educating. Try to build a culture which is enduring, sustaining its credibility to all the stakeholders. Run an enterprise like a financial institution, you need to take care of all the stakeholders, customers to start with, shareholders, we have to produce the best return, regulators who set in time and again socio-economic prospects, and making sure you're socially conscious. These are dimensions you can't afford to ignore if you have to sustain the value streaming. You have to be positive and you have to be productive. That's what I've learned. I had the privilege of being part of the interactive session a couple of days before. President and his team asked me to speak on the investment banking. Very interesting. I asked the classroom, 70 or 80 students were there. I asked them, how many of you want to become bankers? Sudden silence. No reaction. I was wondering what happened. You don't want to be part of investment banks like JP Morgan or Morgan Stanley or Goldman Sachs. No reaction again. One boy stood up and said, we don't want to bluff. We don't want to be in casino banking. We don't trust banks anymore after Cyprus. Food for thought. Think about it. This is the changing face of the world. This is the changing face of the financial service. The crisis today is not confined to financial service alone. It's a social crisis, if you look at it. Some of the questions which I have gone through, if I narrate to you, I have done the keynote for the next 20 minutes. The questions were very interesting. Why did the crisis crop up? What are the lessons we have learned? Are we going to learn lessons now and make sure we re-regulate to protect the consumers and the stakeholders? These are questions from the younger minds. And again, what's happening in the financial market? Somebody is saying gold is crashing. Why? Why stock markets are up? In Japan, 30% in the last 2 months. What's happening to the bond market? Why the system didn't prevent, the light switch regulation didn't prevent these happenings? What these economists and pundits are doing? What about the real economists? Is there a connectivity in the global map between the emerging markets and developed markets? And again, what you're going to add value for future generation? These are questions. Let me start answering to you one by one. Very interesting. Very exciting to respond to it as well. We live in a changing world. The change is happening on account of globalization. Change is happening on account of re-regulation. What was once started as deregulation has become re-regulation today. Rightfully so. Change is happening on account of technology and consumerism. Whether you call it as Facebook world, we are more than ever interdependent. We live in a shrinking world. That's the change we are seeing. This change is for good. The challenge is also for good. What's happening in the world today is interesting and exciting for us to learn lessons. I learned lessons. It was August 8, 2008, Midtown Manhattan. I have an office in 100 Wall Street. Emerging Market Conference was organized by JP Morgan, 8 September 2008. On a daily morning, I used to go for a jogging. I was cutting across Times Square, Lehman Brothers, 159 years old institution. I saw it on 8th of September, mind you. 10 o'clock, I had an interview in Fox TV. Along with me, one of the Lehman executives was sitting there. The anchor is asking, her name is Alexis. She was asking, Mr. Seetharaman, do you believe this institution is rightly crafted as on date? I said, no. He was arguing, counter-arguing, saying that, no, our balance sheet is strong. We know the liquidity positions. We can carry on. We are a sustainable institution. We have survived for 159 years. I went back to Doha on 14th of September 2008. I switched on. Institution is no more. And again, October 2008, I was cutting across New York for my fund meeting in Washington. Same Marriott Marcus, Times Square. I was jogging again. I saw the digital advantage. It was no more Lehman Brothers. It was Barclays Capital. How do you take it? 159 years. How do you expect the younger minds to trust an institution? Who has failed? The auditors have failed. The rating agencies who have given AAA certification, they have failed. And again, financial innovation beyond definition has resulted in such a corporate crime. How can you trust financial institution? What's the lesson you're learning out of it? Look back. Light switch regulation has failed. The monetary policy has failed to deliver the systemic risk, recognize the systemic risk. Fiscal policy is beyond control. That's what's the scene. Investment banks, when the asset price inflation was on, they were printing the debt paper, got it AAA certified, gilted, selling world over. When the asset price deflation started, not only you lost your prime cover, subprime has come. That's the definition of the problem. It has infected, it transcended borders, infected the real economies. Countries, continents who are insulated in terms of macroeconomic fundamentals have not been isolated from the crisis. You are insulated, but you are not isolated from the global crisis. That's what we have seen. How do you expect the younger students to recognize financial institutions are acceptable? Look at the mindset today. Gone are the days. It is not only confined to America. America is still reeling under pressure. The gross debt to GDP is under pressure. Your fiscal cliff is an issue. And again, your debt ceiling is an issue. These rating agencies should be governed. I had the privilege of meeting Ban Ki-moon on 12th of February 2010. I did mention to him, United Nations should drive the change in terms of recognition of the rating in substance. We don't need one country to cast judgment on others. Underlying fundamentals apart. You need to bring in transparency and governance to the overall system. So look at the systemic risk. Economists couldn't predict such a tragedy is in the making. That's what financial institutions have ended up with. Where is the governance? Where is global governance? That's the issue. Monetary policy and fiscal policy has to get aligned. Today, even after 5 years, still we are combating the issues. Then G7 has become G8, G8 become G20, inclusive growth, and G20 has become G24 today. We are discussing still, as we speak in Washington, the finance ministers of G24 are discussing to see how to bring in global growth, how to sustain global credibility, how to set the financial institutions viable, how to set in re-regulations to make sure sustainability and trust and confidence comes in to financial institutions. That's the world we are in. It's not out of danger still. The patient is still in ICU. We put a saline water and keep him going. He still is in ICU. What has changed is liquidity. Try to understand. What has changed is liquidity. A liquidity crisis has become, credit crisis has become a liquidity crisis. Liquidity crisis has become the funding crisis. Funding crisis has become a solvency crisis today. Individuals and institutions, countries and continents who live beyond their means have to pay a price. The world has to deleverage. The world has to deflate in real response. The world has to be real from financial toxic status. That's the world. That's the conversion we are in. That's the change we are seeing. There's nothing wrong in the change, nothing wrong in the transformation, nothing wrong in the governance remodeling its substance. Look at Europe. It's not confined to Greece alone. In 2010, January started. Billions of dollars IMF is trying to pump. EU is trying to pump. And again, it is contagion. It is infected right across. When you have Maastricht criteria set in as a discipline, 60% is the GDP you can allow as a gross debt, and deficit financing is confined to 3%, the monitoring mechanism has failed. The convergence criteria has not been fulfilled. Otherwise, you would not have had problem in Greece. Look at the substance. While you have a centralized monetary policy, European Union is controlling, defining it, measuring it, managing it. You have a decentralized fiscal frame. How can you accept the design? You can only have an abridged version of the euro in substance unless you create a fiscal union, unless you define the overall debt net positions and accept each other. Like a family. You have weaker partners. You have rich, poor within the family. You don't marry individuals. You marry families. It's a combination. Marriage is a combination of families. You accept each other. You're ready to face the consequence of the future and ready for the sacrifice. Unless that trait comes in, that character comes in, you cannot have solution for Europe. That's real. And again, move to Asian economies. Incremental consumption comes out of the Asian markets, the emerging markets. 60% of the global productivity today incrementally comes out of these markets. China, India, Russia, Brazil, Indonesia, Saudi Arabia, New Mexico, South Africa. But they have a different spell too. They are interconnected in the global world. China is slowing down today. India is going through stagflation. The inflation is over and above the growth. Brazil, the same problem. Russia, the same issue. The result is what you're seeing today. Still, you need inclusive growth. You need developed market to support, and the consumption comes out of the emerging markets. How do you fix it? It's not out of a liquidity issue alone. The rules are getting redefined again. In terms of global governance, the substance is getting redefined. You need to re-regulate. It's not only confined to banks. It's not confined to banks alone. You have good banks, you have bad banks. You need to consolidate the position and make sure you sustain re-regulations to make sure that we have a viable model. That's why capital rules are getting redefined. Consumer protection comes in. Who was the loser in the whole game? It's a common man, not a Wall Street. It's a Main Street man who has paid a heavy price. He has to be protected. That's why consumer protection comes in, whether it's credit card or limits in lending. You need to make sure he gets the right kind of substance to see that it is possible for him to service these debts. He lives within his means, and he's not being overcharged. That's the change we are seeing today. That's good. That's good for the humanity. This crisis is only re-regulating to see a common man is getting the right kind of descriptions which he deserves, and he lives within the means, which is ethical and moral. Countries and continents have to learn the lessons in the same framework. And that's what the reflection we are seeing today. And again, countries like Australia, commodity-driven. It's a good model. Again, interest rate is low, inflation is low, the growth is moderate, still sustaining. Financial stability is there. Commodity-driven economies like the Gulf states, where 45% of the world oil, 22% of the world gas comes from, they have a very strong investable surplus, current account surplus. Current account surplus is over 20% for the last year. And they run in sovereign funds, investing in multiple markets, multiple sectors. Qatar itself is a telling story, running over 100 billion surplus funds, investing world over. That's not the issue. Issue is much bigger. In terms of realignment, global governance, we need to recognize that we have bigger challenges ahead of us. You need to set in universal standard in terms of accounting, valuation, securitization. These standards ought to be fixed to make sure they become global in its norms and substance. You cannot have different set of regulations in the United States. Their accounting methods are different. Capital rules are different. You see the movement between Basel II to III when countries, developed countries, have not fulfilled Basel II. How can they move to Basel III? Capital rules. When you leverage, Lehman Brothers have leveraged 79 times. I was telling the students day for yesterday. 79 times the balance sheet. A good balance sheet, good bank, asset to shareholders' equity, maybe 10 times. Asset to shareholders' equity could be 10 times. You can't do 78 times. Where were the regulators? Now, off-balance sheet securitization. This is funny. This is fiction. These all to be clean. The system has to be clean. Trillions of dollars are locked in an infectious forms. These all to be cleaned. And you have to recapitalize them. You recapitalize the bad banks and split them. And making sure who is going to fund this? Where the money is going to come from? You can print money. That is Abenomics today. You can print. That's what we have done. Mind you, what has changed is the liquidity. That's why capital markets are all booming. Again, commodity markets are all nose diving. Look at the change. In the last 3 months, the question I'm answering to the student who was asking me, why did the capital market went 30% in the last 2 months? Politicians have made it very clear they will inflate the economy by 2%. They will go for open market operation. They will buy their own commercial bonds, and they will make sure the currency is weakened. When the currency gets weakened, you have more exports come in. Where is the global governance? Where is the character in the whole frame? So anyone can print money and inflate an economy. That's what you're telling. That's what the lessons we have learned. That's what the tools we have. Accommodative monetary policy today is driving the change. There's nothing wrong in it. But the framework which you are adopting is not going to have sustainability in real frame. These are not fictions. These are real. These are real tools used. Accommodative monetary policy, quantitative easing, QE1, QE2, QE3 today. America has done. Japan, Abenomics, is telling the same story. Today, 30% market is up in the last 2 months, only because we know the currency war can create trade war. Once you weaken the currency, you have opportunity to make it export. The economy will grow. But where is the free market dynamics? Where is the market dynamics which sets in itself by forces which are economically independent in frame and substance? That's what the issue is all about in terms of global governance. It's not confined to one type of banking alone. Even Islamic banking, Sharia-based finance, people say it is ethically, morally well governed. It's nothing wrong with the Sharia. How you execute. The Sharia says you have to have underlying assets. Sharia says you have to, not to be a money lender, but you are a partner in the whole frame. You have to be transparent. But many financial institutions, Sharia-based financial institutions, have failed, not because Sharia is wrong, but the execution was wrong. Asset-based finance was the overall lending happened, not asset-backed securitization. So it's all practitioners' error. In substance, you have to recognize the change, what is happening is good. Financial markets today, everywhere in the world, is a gambling ground. It's true. There's nothing wrong with the questions the young students have asked me. Because they're distressed of what I have seen in the world today. Property market, yes, it's coming up. Stock market, it's booming. Commodity markets are failing. What does it tell you? Commodities are real. Gold is real. Gold is no more a commodity. It's a currency per se. You can liquidate any time. But that is falling. Why? Ask yourself. That's the world we are in. That's a change we are witnessing today. You don't expect younger people to recognize financial institutions are trustworthy. On top of it, you had example of Cyprus. You never touch a customer. Never touch a customer. And even in 2008, when the global financial crisis was visibly shaking the world, we know there are 3 things to be guaranteed. A bank, whether you call it as a local bank or a global bank, whether you call it as a private bank or a public bank, it is global, it is public. More than the shareholders' money, the public trust is what the customer deposit is all about. If you start taxing the customer deposits, who is going to trust the financial institutions? Who is going to put the money in the financial institutions? That's a wrong precedent. I said it in CNBC, they faced it in Berlin. I said it in Sydney. The issue is we need to recognize the changes which are happening in global governance. Corporate governance has always been an issue, world over, time and again. You sit in regulations which are important for us to see through, that stakeholders' values are not compromised. And we have seen a number of examples, whether it is WorldCom or, Arthur Andersen. But what's happening today in terms of global governance in the last 5 years is interesting and exciting for us to learn lessons. These lessons ought to be learned, and then the policymakers have to necessarily make sure these are redefined for substance, to promote value advantage for the future generation. That's what the boy was asking me on that day. What are you going to do for the future generations? Yes, we need to make sure we create a world, better citizenship. Which has to be ethical and moral. We should have enduring values. We should have sustainability in real respects. Not only we need to eradicate extreme poverty, not only we need to bring in gender equality, not only we need to combat HIV, malaria, or other terminal diseases, not only we need to create human prosperity by recognizing the changes which are happening in Arab Spring today, we also have to create enduring value for environment sustainability. That's not an option. Unless you create green economies, unless you understand the challenges ahead in terms of living standard, basic living standards in the industrialized world, rising temperature, increasing sea levels, how are you going to make sure your children and grandchildren are safe? That's the issue. That's what the boy is asking. He's right in asking. He's right in demanding the policymakers today to converge, whether you're a politician or economist, come to terms to make sure not only you create a better world, better citizenship, to make sure we have sustainability in the making. Thank you, ladies and gentlemen, for your kind attention.